Yes, very good afternoon. I hope you're doing well. So I just wanted to know, I will obviously introduce myself, but before I introduce myself and before I start talking, I just wanted to know who is the audience here? As in, are you people done with the syllabus? Everything done? Is the Kaplan kit over? Is the BPP kit over? What is it you've done? Have you done the study hub practice questions? Okay. Did you do self-study? Did you study in some institute? Do you have any specific textbook topics that are weak? Right? So can you all type and let me know what have you done? Self-study, institute study? Just type and let me know. Quickly, all of you, self-study and how much have you completed? Along with that, you mentioned what is it? Have you completed everything? Because literally we're heading into exam week. So let me know. Others, what about you? Okay. What we have and what we're going to just going through. Okay, very good. BPP exam kit is also done. Kaplan kit is done. Study hub questions are done. In section C, theory questions and also a bit of capital allowance and CGT. Okay. I've studied with an institute, but still feel not prepared well. Not yet completed BPP kit and Kaplan. Okay. Okay. So see, I'm breaking this marathon into two parts. Okay. Today's session, I'm going to do the textbook. Self, but almost completed everything. Good, Saurish. So today's marathon, please don't expect me to be doing the kit. There are two marathons. Tomorrow's marathon, I will be doing the kit. I will be doing random kit questions. Today's marathon, I will be just doing the textbook. Okay, I will be running through the textbook. I'll be going through the textbook fast. Okay, that is the objective of today's marathon. Right? So let me share my screen. So this, I'm using the Kaplan textbook. Hi guys, my name is Shaz Bharati, and whoever wants to reach out to me can reach out to me with this number. We're from Chartered Academy, all right. And of course, obviously, I'm going to do things fast. I'm going to run through the syllabus fast. Okay. Now, first things first, all the types of tax that you have seen, right? When you live in a country, you need to pay the government some taxes, right? You need to, whatever you earn, you need to pay tax on that. That tax is income tax, the tax on your earnings. As simple as that. Then you have something known as a capital gains tax. This is when you sell an asset. Maybe you have a property. This is your property. Okay, this is your building. You sell the building, okay, and you get 5 crore rupees, 5 CR, 5 crore. This 5 crore will also be taxed. That is capital gains tax. Tax that needs to be paid on disposal of certain asset. Then comes what? Inheritance tax. What is inheritance tax? When suppose you get some money, maybe there is an ancestor who passed away or who gave you a gift, who gave you their estate, who gave you their property. That will also be taxed, and that is what inheritance tax is. To be paid when you inherit from an ancestor or get a gift. Then comes corporate tax. As the name suggests, this is the tax that is paid by companies, corporates. Companies earn money, right? So when they pay taxes, that is corporate tax. Paid by corporates, paid by companies on their income. Then comes VAT. What is VAT? VAT is basically where this is value added tax. This is where if you're buying something, okay, say you're buying this car, which looks more like a hat. So let it be, say you're buying a hat. The hat is only 500 rupees. But in addition to that, when you're buying goods, when you're buying services, for those goods and services that you buy, you pay tax on that. You pay another 18% that the government takes from you. That is VAT, value added tax. This is the tax that you pay when you purchase goods or services. So again, guys, the objective of today's session is to quickly, fast run through the textbook concepts, the textbook chapters as a quick revision, and obviously to enhance your understanding. Tomorrow, whoever is here for the kit, tomorrow's objective is to do questions from the kit. Okay, now we look at direct and indirect taxes. What is direct tax? What is indirect tax? See, one is where you, okay, I'll give you an analogy. This I generally prefer explaining things with the help of analogies and examples. But say you have to give me a gift. There are two ways to give me a gift. Either you give it directly to me, so you come to me and you give me the gift directly, or you give it through a friend. The first one is where you are directly giving it to me, and the second one is where you are giving it to me through somebody else, which is indirect. This is also the same for taxes. Direct taxation is where you directly log in to the HMRC. Now, all of you, again, because this is a marathon and something as basic as HMRC, you should obviously know, but obviously, if somebody does not know it, you can let me know. But when you directly go to the authority's website and directly pay the tax yourself, that is direct tax. You directly go and pay the tax to the authorities. Okay. For example, whatever you earn, your income, whatever it is, you show what your income is, and then you directly go to the website, you go to the portal and you pay it there. But then comes indirect taxes. What is an indirect taxation? What happens is, again, go back to the hat example. Okay, I buy this hat. Okay, this is me. I buy this hat. Okay, I'm wearing this hat. Now, when I bought this hat, I paid tax on the hat also. But I did not go to the authorities' website and I did not pay there. Right? When you pay GST, suppose you're going to Starbucks, you don't go to the gst.gov.in website and you don't pay, separately for the coffee to the Starbucks, and the GST you directly pay to the gst.gov.in. You don't do that, right? The coffee amount plus the GST, you give it to Starbucks itself. So you are paying tax, but you're not paying it directly to the authority. You are paying it to the intermediary. You are paying it to the shop, and then the shop pays it to the HMRC or the authority later. This is why this type of taxation is known as indirect taxation. You pay tax for goods and services bought from shops. However, you don't pay it to the authorities. You pay it to the shop. This shop later pays it to the authorities. You understand? This is direct tax and indirect tax. Direct tax, again, it's where you directly pay to the authorities. Indirect tax is where you pay it through an intermediary. Then comes what? Structure of the UK tax system. All of you should by now be aware of the HMRC. Let me know if anybody does not know about the HMRC. Is there anybody in this class who does not know what the HMRC is? Everybody should know about it. Again, wherever I'm going faster or if I'm skipping something, it's because those are like the basics of basics. So if anybody wants to stop me there, please do. Okay, so again, guys, please let me know if there is something that you don't understand or if there is something where you need help. Now, although from a tax point of view, from a tax exam point of view, knowing these fundamental principles, from a tax point of view, it's not so key, but from an ACCA point of view, it's very key. So I have made a video, a demo video, where I'm talking about the fundamental principles: professional behavior, integrity, confidentiality, objectivity, professional competence, and due care. I am talking about this in a small 40-minute video. So whoever wants more support on this, again, from a tax point of view, it's not so, this is something you should know anyway. In all the exams, we learn about the principles. In AA, we learn, in PM, we learn. Right? So whoever wants support with this, reach out to me on this number and I will share the link to you of that video where I'm explaining objectivity, professional competence and due care, professional behavior, integrity, confidentiality. You can message me. All you have to do is please share with me. Tell me, please share with me the link for that video. I will share it with you immediately. Okay. But again, I want to keep the pace neutral. I don't want to go too fast because there are people who haven't done everything. And I don't want to go too slow because there are people who have completed everything and they just want a quick recap. Right? So with that, the first chapter, majorly, two things I wanted to majorly talk about, because again, we're doing the tax paper. So I wanted to talk about the types of tax and direct and indirect taxes. Okay. Anybody from this specific chapter wants me to do something specific, can let me know. Just type it and I will do it. Don't worry. I'll give you a minute. All of you turn the pages of this chapter. See if this chapter is 200% confident. You are confident 200% with this chapter. And then we will move ahead. Go through again, you have the chapter, guys. You have the textbook. So turn the pages, go through everything, and let me know if in this chapter you want me to do something. If all clear, just say all clear. So I will confidently move to chapter 2. Others fast? Anyway, now we're looking at chapter 2. And I think I will look at personal allowance, because again, although personal allowance is very simple, personal allowance is something that you literally learn, you literally are expected to do in every chapter. What is this personal allowance? Personal allowance is basically, imagine you have a salary of 50,000. Out of this 50,000, your father asks you to give him 10% of the salary every month. He's saying, you have to give me 10% of your salary. Right? So out of 50,000, you're giving 10% to your father. So you have to give 5,000. But your father is being a little kind with you. He's saying, no need to give me 10% of everything. Out of this 50,000, you take out 5,000 for yourself completely. You take this, go out to cafes, go out for movies, go out to go wherever you want. I will not take any money from this 5,000. It is only on the remaining amount that I will charge you. So I will take 10% of 45,000. 5,000 is free money for you. Free money means that money will not be charged, or that money will not be taxed. This is the same thing the government does. The government on your annual earnings gives you an allowance of 12,570, which means that 12,570 is not taxed. As in, you don't need to pay tax on this 12,570. Meaning, if you have an income of $100,000, out of this $100,000, $12,570 will not be taxed. It is free, tax free basically. In certain countries, there is no tax. All your income is tax free. In the UK, there is an allowance of 12,570 that is not taxed. That allowance is known as personal allowance. I hope everybody is clear with this. And everyone is entitled to have a personal allowance of 12,570. Now, the tax exam itself isn't necessarily hard, isn't necessarily difficult, like for example, audit and assurance exam. There's a lot of common sense that you need to use. The PM exam, there's a lot of logic you need to implement. But in the tax paper, a lot of it is just memory. You need to know, okay, personal allowance is 12,570. What is this 12,570? I will not be taxed on this amount. As simple as that. Let's go down. Now, suppose your salary increases. It becomes 1 lakh. Now, your father stops feeling bad for you. Why? Because you are a rich guy or girl. You're having a salary of 1 lakh. So, your father reduces the amount which he is giving to you free. He says, now that your income has increased, your personal allowance will decrease. So, whenever the taxpayer's adjusted net income increases, exceeds 100,000, personal allowance will drop by 50% of whatever is the increase over 100,000. I think the best would be to look at an example, illustration 1. You see, Ethan has a trading income of 110,000, meaning Ethan has an income of 110,000, out of which normally personal allowance is 12,570. But in this case, because Ethan is earning more than 100,000, there will be an adjustment to the personal allowance. You understand? There will be an adjustment to the personal allowance. What will be the adjustment to the personal allowance? Again, you are earning 110,000. You need to get the adjusted net income. This is the trading income. But you need the ANI, which is the adjusted net income. How do you get the adjusted net income? Is from the net income, you need to deduct any donations and contributions towards pensions. Again, you all know there is a later chapter on pensions where we will look at pensions in more detail. But from the net income, if there are any donations made or any pension contributions made, you will deduct that to get the adjusted net income. So in this case, we have made a donation of 4,000. So the adjusted net income is 100,000 minus 6,000, which is 106,000. All right. This is your adjusted net income. Now you want to see how much was the threshold I told here. When you earn more than 100,000 or 1 lakh, there is a threshold of 100,000. Up to 100,000, your personal allowance is 12,570. But once you cross the threshold of 100,000, there will be an adjustment to the personal allowance. Therefore, the personal allowance threshold is 100,000. The adjusted net income is 106,000. So how much are you earning? How much is your adjusted net income in addition to the personal allowance threshold? How much excess are you earning? You're earning 106,000. And we said personal allowance will be 12,570 up to 100,000. So the excess amount that you are earning is 6,000. And if you go back to the formula says the exact same thing. The formula is adjusted net income minus 100,000, because remember there's a threshold of 100,000. Up to 100,000, personal allowance is 12,570. Vansh, I'm not sure what you're trying to say. ऐसा नहीं है कि 5 ही जब. I don't know if again, if you're talking to me, I didn't get what you're saying. But if you're talking to somebody else, then yes, my bad, your mistake, yes. So as I said, the excess amount is 6,000, right? And as the formula says, the personal allowance will be reduced by 50% of this amount. Therefore, the personal allowance will be reduced by 3,000. Normally, the personal allowance is 12,570. But this time, I'm adjusting the personal allowance by reducing the personal allowance by 3,000. So, the personal allowance will be therefore, the adjusted personal allowance will be 9,570. All clear, or is there any problem? Whoever is all clear, let me know. Anyone, any problems also can let me know. Please type fast. Quickly. Very good. Clear, clear, clear. Yes, these are like the basics, but again, they're very important because as you all know, this is something that will continue later. Then again, in the tax exam, what do you have? So again, guys, in this marathon, throughout this marathon, what I suggest is take down notes in such a way that it helps you recap on things. Again, this class is not a class where I'm teaching you new things. Okay, take down notes. Take down notes as in, for example, first important note is personal allowance 12,570 up to 100,000. Make a note of that point. It will help you recap. Second point is what? How do you get the adjusted net income? Adjusted net income is equal to what? Adjusted net income is equal to, from the net income, you make any, if you make any donations and pension contributions, you deduct that. So you make a note of that also. So it's like a quick recap of all the things you are expected to remember. Net income minus pension contributions made minus donations will be your adjusted net income. How do you adjust personal allowance? Personal allowance adjustment is, again, if the personal allowance if the income crosses 100,000, personal allowance will be reduced by 50% of how much ever is the excess adjusted net income you have above 100,000. For example, if your adjusted net income is 140,000, then 140,000 minus 100,000 will be 40,000. So obviously, it will be reduced by 50%. But again, even over there, there's a threshold. I'm just putting certain pointers that will help you recollect points towards the end. Okay, now similarly, there's another thing which you need to remember. There's another thing that you need to know, and that is with respect to non-savings income. What do I mean by non-savings income? And the thresholds is this. What I mean by this is when you are taxed for the first 37,700 that you earn, you will be taxed only 20%. Again, tax paper, whoever felt tax is difficult, you just need to know these thresholds. If you know these thresholds, you can do a sum on your own. You don't need a faculty. Anything from 37,701 to 125,140, you are taxed at 40%. And if you still have earning above 1,25,140, you will pay 45% tax on that. right? So again, let's put that in our pointers. The tax rates for non-savings income. So it's 20%, 40%, and 45%. Again, respectively, 37,700, 125, 140, and above. These are the thresholds. What I mean by this is you will pay a rate of 20% up to an income of 37,700. If you earn anything above 37,700, you will pay 40% tax up to, I'm putting it in different colors, up to 140,000. Sorry, 125,140. And you will pay 45% anything above 125, 1. So these are the thresholds which I have put in the pointers. Again, by the end of this marathon, you will have so many pointers that will help you recollect things fast, that will help you do the revision fast. Okay, let's move ahead. And again, we will look at this illustration. Amir has taxable trading income of 21,000 and employment income of 3,000. He has no savings or dividend income. So again, how much is Amir's total income? Total income of Amir is 24,165. Now, out of this 24,165, guys, he will have his what? Personal allowance. No need to pay tax on 12,570, and we don't need an adjustment for personal allowance because Amir's income is less than 100. So you deduct his personal allowance. This personal allowance is the amount which is tax free for you. Amir does not need to pay tax on this 12,570. Amir will pay tax on the balance amount. So the taxable income that we have is how much? 24,165 minus 12,570. How much is it? Who can tell me the answer first? Again, since it's a marathon, I'm going a little faster by just looking at the answer directly, right? So his taxable income is 11,595. So go back to my pointers. Look at the thresholds. Anything below 37,700, we will tax only at 20%. So Amir will be taxed only at 20%. So 20% of 11,595 will be how much? 20% is 2,390. So the taxable income is 2,390. So this is illustration 2 in chapter 1, chapter 2. Let's move ahead faster. One more example, I'll do illustration 3 and then we can move ahead fast. Okay, this example, because there are two thresholds. Thala, let's look at Thala's example. Thala has taxable trading income of 43,765 and employee blah blah blah. So Thala has a total income of how much? 43,765 plus 7,000 is 50,765. Total income for Thala is 50,765. Again, as I said, even Thala wants tax-free income. So the government has granted Thala something known as a personal allowance, meaning that much amount Thala does not need to pay tax for. This amount is fixed up to 100,000 at 12,570. So for this 12,570, there is no tax. No tax to be paid. So only the remaining amount we will pay tax. So the remaining amount will be taxable income. How much is the remaining amount? 50,765 minus 12,570 is 38,190. This is Thala's taxable income. Now, as I said, up to 37,700, we will tax at 20%. 37,000 for the first 37,700, we will tax only 20%. Then, how much is the remaining amount that is untaxed yet? 38,195 minus 37,700. How much is the untaxed amount? 37,700. I'm taxing at 20%, which is 7,540. The remaining amount is how much? From 38,195, if 37,700 is already taxed, the remaining amount is 38,195 minus 37,700, which is 495. This is anything, this is the extra amount after 37,700. Therefore, that amount needs to be taxed at 40%. Anything in extra of or in excess of 37,700 will be taxed at 40%. So, what do you have here? So, the extra amount of 495 is taxed at 40%. So, 40% of 495 will be 16 something. 198. So, this is how much tax Thala will pay for her first 37,700, and this is how much tax Thala will pay for the second, the second category of her income. So the total tax that Thala will pay, her income tax liability will be 7,540 plus 198. So Thala has to pay tax of 7,738. Yes, I hope everyone is clear, guys. 7,738. So it's very easy. Does anybody want me to do illustration 4 or it's good? Who wants me to do illustration 4? Not required means you can say all clear. Okay, so this is how you calculate what? You calculate the taxes. All right. So again, savings income is kind of easier. It's kind of simpler. Right. Anyway, anyone having any specific problems anywhere can let me know. Then comes something known as income tax payable. This is where I will give you an analogy to understand this, but it's like this. Suppose you go out to a restaurant with a friend. The total bill was 5,000. But your friend said, okay, I'm going to the washroom. So he gets up and goes. Okay. Then the waiter comes with the bill. And the waiter tells you that your friend has already paid 1,500. So how much do you need to pay now? If the waiter comes with the bill and says, friend has already paid 1,500. Paid amount, already paid amount is 1,500. So the amount that needs to be paid, or the payable amount, is the balance. 5,000 was the bill, 1,500 was already paid. Therefore, the payable amount is only 3,500. This is exactly how income tax payable works. You have something known as what? Pay as you earn, where what your boss will do is he will directly deduct the tax that you need to pay. The employer is required to deduct income tax from the employment income. So suppose I am your boss. Your salary is 10,000, but you need to pay tax of 1,000. I will deduct it before itself. And I will only pay you 9,000. I will pay you only 9,000. Why did I deduct 1,000? Because I paid 1,000 tax on your behalf to the authority. So, keeping that in mind, let's look at the last part of illustration 11. I will not do the entire illustration because you know how to solve illustration 11, but just the last part of illustration 11. How does this work? According to this question, there is a taxable tax liability of 9080. But according to the question, there was pay as you earn of 80. What do I mean by pay as you earn? It means $80 or 80 pounds was already deducted from your salary, and the boss paid this to the government. The boss paid it to the HMRC. This $80 tax was paid on your behalf by your boss. Therefore, the liability, tax liability is 9080, just like how the bill was 5,000. But from that, 1,500 was already paid. Same way, from this 9080, pay was already deducted by my boss. So it's already paid. So the income tax that is remaining payable is, go back to this example, from 5,000, 1,500 is deducted. So the payable amount was only 3,500. Therefore, the payable tax payable is $9,000. You see, this is the answer, $9,000. I hope all clear. Okay, is there anything specific in this chapter that you want me to do, guys? Again, certain important things I'm taking out and doing that. Again, we have these pointers. These pointers I have. But in this second chapter, go through the second chapter, turn the pages of the chapter, and see if there is something specific in this chapter that you want me to do. Because normally, if I have unlimited amount of time, I'll go through everything, give examples, give analogies for each and everything. But again, we have only 3 hours to complete. So in this second chapter, is there something specific you want me to look at? Is the question. Or all clear? If all clear, then we can move to the third chapter. Again, in the time that we have, I'm trying to do as much justice as possible. All clear? Let me know, guys. Okay. Okay. Now again, numbers, numericals. If I have to take certain very important aspects, again, residency rules. Okay, what are residency rules? When will you call somebody a UK resident and when will you call somebody a non-UK resident? So these are residency rules, right? And I'm directly coming to the summary. All right. Look, when it comes to the summary, if you have spent more than 183 days in the UK, then automatically you are a UK resident. Or your only home is in the UK. Then also you become an automatic UK resident. Or you have a full-time job in the UK. Then also you become automatic UK resident. Right? So if I have lived in UK for more than 183 days in a specific tax year, I automatically become a UK resident. Or if I have a full-time job in the UK, but I keep moving around, then also I become an automatic resident of UK. Or my only home is in the UK, then also I become an automatic UK resident. When will I not be a UK resident? In a tax year, if I've spent less than 16 days, it's over here, then I am not a UK resident. I will not be considered a UK resident. Or I am new to UK. Last year I was not in UK. Last year I was not in UK. Last year also I was not in UK. Then even if I stay in the UK for 20 days, that is which is more than 16 days, even if I stay in the UK for 25 days, 30 days, 40 days, I will not be a UK resident. So if I have no prior connection with the UK, what do I mean by prior connection? Last year also I was not in UK. For the past 3 years, I was not in UK at all. Then even if I stay in the UK for 45 days, I will not be considered a UK resident. So if you have had no prior connection with the UK for the past 3 years, I have had no connection with the UK. Then even up to 46 days, I will automatically be a non-UK resident. Or I have a full-time job abroad in another country. If I have a full-time job abroad in another country, then it is up to 91 days also if I stay in the UK. I have my full-time job in Dubai. Then even if I stay in the UK for up to 91 days, I will not be a UK resident. Okay. Then there are those category of people who don't clearly fall in this or in this. For those people, we do this test. Of course, this is also a test. Automatically, you become non-UK resident test. This is an automatic non-UK resident test, meaning, again, if you've stayed in the UK for less than 16 days, you are not a UK resident. Then we look at sufficient ties test. It is for those people who are not in either of these categories. For them, we will see if they have proper connections in the UK, like a family member in the UK, a close family member, like a child, like a wife, like a husband. Do I have a reasonable amount of work in the UK, productive work in the UK? So you will look at how many ties I have with the UK, and then based on that decide whether I am a UK resident or not. Okay, so this, a lot of people before the exam, they are clueless. But I hope this is clear now. Again, if you don't fall in either of these two categories, you have to see how many sufficient ties are there. Again, you will see how many ties and then based on that decide. For example, you see here, if you have 4 UK ties, 2 UK ties, 3 UK ties, so you will see whether you have enough UK resident ties or UK ties at least, maybe not UK resident ties, UK ties. And then based on that, decide whether that person is a UK resident or not. Okay, I hope this is clear. Now comes marriage allowance. How many of you have mobile data? How many of you have got mobile data? How many of you have mobile data, guys? Let me know. Yes, once you have mobile data, right? So what happens with this is I have 1.5 GB of data, right? Now this 1.5 GB of data, if it gets over, what do? I don't have data. But if there is unused data, I can switch on my hotspot and let my partner use my data using hotspot. Something similar is how marriage allowance works, right? So if I have any unused personal allowance, I can transfer it to my partner so that we can bring down their tax liability. That is what marriage allowance is. Now again, let's get straight to an answer because I would expect that you know these rules. So if one person does not fully use their personal allowance, maybe because they don't have so much income, but the other person fully uses their personal allowance, then the second party can take some personal allowance from the first party.
It's 5 o'clock.
Okay, I hope this is clear. So let's go to illustration 1, chapter 3. Kevin and Judy are married, blah, blah, blah. So they have this income, 35,000 and 6,000, right? So what happens? Kevin, okay, in fact, I don't even think I should write because it's that simple. Kevin has 35,500. Judy has an income of 6,000. Now, both of them have an income of less than 100,000. Therefore, no adjustment as such is needed for the personal allowance. You understand? No adjustment is needed for personal allowance. Both get personal allowance of 12,570. However, in this case, what has happened? Judy's personal allowance is reduced. Sorry, not Judy. Yeah, Judy. Where is Judy? Okay, I'll come to Judy shortly. But what is happening is this. In Kevin's case, let's just look at Kevin to start off. In Kevin's case, from 35,500, we deduct 12,570 as usual to get his taxable income at 22,930. Now remember, he is below the threshold of how much? How much did I say is the threshold? 37,700. Therefore, the tax rate that will apply to Kevin is only 20%. So the tax liability that Kevin will have is 4,586. How did I arrive at this amount? I took 20% of 22,930. So the income tax liability is 4,586. Now what is happening is this. Again, think about it. Judy, okay. Judy's personal allowance is reduced to 11,310. Why? Because first of all, go back. Look at this. Electing for the marriage allowance allows the transfer of a fixed amount of personal allowance, which is 10% of the individual personal allowance, which is 1260. So the transferable amount of personal allowance is 1260. Therefore, again, what do we have? The transferring spouse's personal allowance is reduced by the fixed amount of 1260. Right? So again, keeping that in mind, Judy can transfer how much? 1260 to Kevin. Right? And Kevin need not pay 20% of that. How do I know that? Again, it is mentioned in the textbook. The person who is receiving the marriage allowance, their tax liability will reduce by 20% of 1260, which is 252. Therefore, Kevin actually had to pay 4,586, but that amount will drop by 252. Why? Because Judy came to save Kevin. So Kevin's liability is only 4,334. So what do you look at? Marriage allowance, 20% of 1260, which is a maximum of 252. The maximum benefit from marriage allowance is 252. The maximum benefit from marriage allowance. So I'm putting this in my pointers. Marriage allowance, max benefit, 252. So if you can have like pointers like this, it will help you recollect points. All right. Moving ahead, what do we have? I think that question is done. Yeah, Judy. Now see, the thing with Judy is Judy has from 12,570, Judy transferred 1260 to her husband. So Judy still has a personal allowance of 11,310, but unfortunate for Judy, her income is only 6,000. So we will deduct. She still has a personal allowance of 11,310. So we will deduct the entire 6,000 as personal allowance, meaning she does not need to pay any taxes at all. So I hope with illustration 1, marriage allowance is clear. Anybody want me to do test your understanding 2, or are we clear? Again, this depends on you. It depends on your requirements. Anyone wanting me to test your understanding, to let me know. Or if it is clear, you can tell me clear and I'll move on. Can you please explain? This part is not clear for Judy. Okay, again, Ash, what is happening is this. Judy has an income of only 6,000. Normally, Ash, personal allowance is up to 12,570. You see, her allowance is more than her income. It's like her saving is more than her income. Her saving capacity is more than her income. So, what will Judy think? Judy will say, I have so much personal, unused personal allowance. It's like Judy has so much mobile data. She needs only 6,000 GB. Now, I know 6,000 GB would be crazy, just for the sake of example. She needs only 6,000 GB, but she has an allowance of 12,570 GB. She doesn't need so much. So, what Judy is thinking is she is thinking of transferring a little bit of this personal allowance to her great husband. This much clear, Ash? So, she wants to transfer, but the maximum amount that she can transfer to her husband is 1,260. So from this 12,570, it's like she's switching on her hotspot and she's transferring 1,260 GB to her husband. The husband gets that. Now, because of this 1,260, the husband has received this and he will save 20% of this amount in taxes. He does not have to pay 20% of 1,260, which is 252 pounds. He saves taxes. Why? Because he got personal allowance from his wife. Is this much clear, Ash? Then what happens? Come back to Judy. Judy still has an allowance of 12,570 minus 1,260, which is 11,310. So Judy still has this much allowance, Ash. However, her income is only 6,000. So obviously her personal allowance cannot be more than her income. Like personal allowance is free money, as in money on which you will not be taxed. Because her income is less than her personal allowance, her entire income will become tax free. This much clear, Ash? So her personal allowance, she has 11,000. But because her income is 6,000, her entire income will go as personal allowance. Therefore, she has no tax liability. Her tax liability falls to zero. Clear, Judy? Anybody wants me to do test your understanding too, or we are all clear? Vansh is clear. Shelly, Sorish, Cinephile, are you clear or you want me to do test your understanding too? Perfect. So we're all clear on this. So again, remember marriage allowance, there is a benefit of 252 pounds, which is in these pointers. So we've seen 5 pointers that are like a quick revision. Okay, moving ahead. ISAs. Okay. Child benefit, how many of you are comfortable with? Who wants support with child benefit? Again, these are some core things. People generally suffer with marriage allowance. See, again, a few days before the exam also, Ash had some trouble. So a few things I know come off as troubles. So I'm doing those only because it's a marathon. In my normal classes, I do everything. I cover everything. But because this is not a normal class, I'm going fast. Only those important core things which people normally confuse with, forget, that I'm doing. Okay, so we've looked at 5 pointers, and I think with that, majority in this chapter, most of the important things in this chapter. Can we look at chapter 4, property income? Let's look at property income and we'll directly jump into an example. Now, look, there is something which we have to know. We are using something known as the cash basis. The cash basis is where you look at the rental income minus the expenses to get the taxable income, actually, technically speaking, assessable income. Just like how in PM or in MA, you will learn, okay, revenue minus cost is the profit. Same way is equal to profit. You know this, you learn this in MA, you learn this in PM, you learn this in MA and PM, I think so, right? Same way, when you have a property, the assessable income would be whatever income you receive from that property, the rent received from the property, from which you will deduct any expenses related to the property that were paid. Okay, so we have to look at the cash basis for individuals and partnerships. Okay, now let's directly look at illustration 1. Hembury owns a property that was let for the first time on 1st of July. The rent of 5,000 per annum is paid quarterly. Again, the question is simple. Calculate property income for Hembury. So you see, Hembury has an income of 5,000 per annum. Hembury paid allowable expenses of 200. Okay, and of 400 in May. All right. So you see how much are the expenses, guys, related to the property? Received rent is 5,000. The expenses with respect to the property is how much? 200 and 400. Do you agree with me? The expenses paid with the property are how much? 200 and 400. 200 is an allowable expense paid in 2024 and 400 in May 2025. So 200 plus 400, 600 is the expense. But this 400 was paid in May 2025. There is a note for that in the textbook. Remember, you need to take into consideration the cash basis. That is, the repairs. This is a repair, correct? Yes. This repair was paid in May. You see the last line, the repairs expense incurred during March 2025 will be deductible in the tax year 2025-2026. March or May? So this work was done in March. So we are paying it in May. So obviously you know the tax year, correct? So this will be an expense that will be deducted in the next tax year, 25-26. So for this year, I will ignore this 400. So please don't get confused as to why we're not deducting 400. The reason is because we will deduct it next year. So the property income will be, I feel a little silly to be doing such a simple question at this stage. Right? Property income is 4,800. That's it. Okay. This is illustration 1 in chapter 4. Now, let us look at illustration 2 in chapter 4. Okay. Again, what is the question? Always read the question first and then the information. Calculate Adam's income tax liability after the reliefs for the tax year 24-25. So Adam owns a residential property. He received rent of 15,000 and his expenses were as follows. He also had trading income of 42,000. Okay, so we need to calculate his income tax liability. How will we do that? What will our first step be? Again, it's very easy. It's extremely simple. How do we do this? Is this? Remember, he has property income. Okay. He has 15,000 from his property. Plus, he has an additional 42,000. So he has non-savings income. So remember, how do I deal with a question like this? Is his trading income is 42,000. All right. I just want to put his total income on the page so that we can calculate easily. Now, look at his property income. Again, the receipt, the amount he's receiving is 15,000. But we can deduct expenses against the property to get the income that is assessable, the property income. Again, think about it. You need to pay insurance for the agent fees. You need to pay it. Deduct it. The insurance, you need to pay it. Deduct it. Okay. Gardener also, we need to pay the gardener, only then the property will be maintained, correct? Deduct it. Right? And then you have the interest cost on loan to acquire the property. Again, think about it. When we speak of interest cost, when we speak of interest, go back 2 pages above. No part of loan finance is allowed as an expense to property income. So finance cost is interest. So none of the finance cost needs to be deducted from the rent received to get the property income. So let's put that in our pointers. Again, the pointer will be that finance cost not to be deducted in order from property income. Right? That's why I am not deducting. Where is that? This, how much? This 7,500. I'm ignoring that. Therefore, what do I have? What is my property income? My property income will be 15,000 minus 1,000 plus 1,500 plus 1,300, which is 3,800. So 15,000 minus 3,800, my property income will be 11,200. This property income I will put here. Anybody, any doubts with how did I get the property income? How did I get the trading income? Anybody, any questions? Anyone? Any questions as to how did I get these different incomes? No? So the total income is what? The total income is 42 plus 11,200. The total income is 53,200. Now, from this 53,200, remember the income is still below 1 lakh. It's still below 100,000. So the personal allowance will not at all be adjusted. The personal allowance will stay as usual, 12,570. Therefore, the taxable income will be 53,200 minus 12,570 will be 41,000. How much? Again, guys, we don't have time to sit and do calculations on a calculator, and I cannot rely on you people to give me answers fast. So I'm just going scrolling down and checking. 53,200 minus 12,570 is 40,630. So taxable income is 40,630. This is his non-savings income. He also has savings income of 800. Okay, so this is his non-savings income. This is Adam's non-savings income. Adam also has savings income, bank interest income. You understand? So his savings income is 800. And remember, the entire personal allowance is anyway deducted. So you don't need to worry about personal allowance. So the entire 800 is taxable. So the total amount that is taxable is 40,630 plus 800, which will be 41,430. So the total taxable income, 41,430. Now again, as usual, you will continue and find out how much is the taxable income we know, but how much tax will we pay? Again, up to 37,700, we pay 20%. Right? Up to anything above 37,700, we pay 40%. That is for non-savings income. Then we have separate rules for saving income. Based on that, you will determine the income tax liability. All right. Guys, is this clear? Let me go to the answer. Is this clear? Just look at the answer. I've got this 41,430. Then the way you treat non-savings income, the way you treat savings income. So this is the amount that should ideally be paid for. And in taxes, you need to pay 8,340 in taxes. Is this much clear to everybody? Anybody, any concerns and questions? No questions? Now, what I want to tell you very importantly is just the part for savings. So, in that case, it indicates that you are not, again, savings income is very simple. So, I had not done that part. So, probably that's why you don't understand this. But what about the others? Again, the reason I'm going faster is because it's a marathon, it's a revision, right? Others, do you know how did I get the savings rate? We have Cinephile, we have a few other people. Do you know how did I get arrive at these amounts? Guys, are you there? Do you know how did we arrive at this? Ash is confused. Ash, you've said that. I'm talking to the others. Cinephile, Shelly, Vansh. Okay, so I will come back to that part. But Ash, we will have a look at this. But again, how much is our income tax liability with respect to non-savings income? With respect to non-savings income, the tax liability is 7540 plus 1172. Okay. And with respect to the savings income, there is the nil rate and the higher rate, which I'll come back to Ash for you exclusively. So technically speaking, we have to pay 8,832 in taxes. But what the government does is the government looks at what the government looks at giving you some kind of reliefs. And one relief the government gives you is when you have this finance charge. So the government gives you a relief. Your finance cost, according to the question, was 7,500. So the government is giving you a relief of 20%. So out of 8832, the government is saving 1,500. So you need to pay only 7,332. Why are you here? AC, that room AC. Send Babu, send him here. So I hope this is clear. Okay, so this is a send him. Babu, you send him. Tell him to come. So the liability is only 7,332. The reason being simple. The reason is actually you should pay 8,832, but you get a relief. Ash, you get reliefs multiple times. One, when there is a bank loan and you have to pay interest. Two, maybe when you do a donation, charitable giving, you get relief because you would have seen in the first chapter basics that government encourages charities. So whenever you give charity, the government says, "Oh, so sweet of you." So the government gives you a relief then. So Ash, I hope this part is clear. So the income tax liability is 7,332. 30. Is this clear? Yes. Perfect. Now, let's go back at the top. I have a few people here in my institute. So what we will do is, anyway, we've completed an hour and a half. Okay. So we'll take a small break. We'll take about 10 minutes break. And 5:40, we will continue, where again, we will do as much as possible and come back. And I know a lot of you have reached out to me saying that the textbook is fine. We just want the kits to be done. That will be done tomorrow. So please don't worry about that. Okay. So you can take a break. This session is just to recap on certain things, that you want. Maybe there are certain things that you want to be done. You don't understand properly. For example, Ash says savings income he's not very clear with. So I'm doing that. Okay, so you can take a 10-minute break, come back by 5:42. It's 5:32. Come back by 5:42. Thanks. Guys, come back. So we're now looking at what? We're looking at the savings income, right, which is 800 pounds. So when it comes to 800 pounds, first of all, you see what kind of taxpayer are you? You have a taxable income of 41,430. Okay, Ash, 41,430 you have. So you are a higher rate taxpayer. You agree with me? You are not a basic rate taxpayer because your income is more than 37,700. You are a higher rate taxpayer, as in you earn more than 37,700. In this case, given that you are a higher rate taxpayer, again, there are certain rules. Given that you are a higher rate taxpayer, the first $500 of your saving income will be taxed at 0%. This is a rule, and I'll take you back to the textbook and show you that. I'll show you right away, in fact. Where is it? I think it's in the third chapter, yes. Yes. Excuse me. Yes. So we're talking about savings. Savings income is normally taxed in the same way as non-savings income. The rates are the same. Okay, the rates are 20, 40, and 45%. A starting rate of tax of 0% applies to all taxpayers where savings income falls in the first 5,000 of taxable income. However, in your case, what you need to see in this specific question's case, go down here, right? If you go down here, what do you see? You see a few things like this. If your non-savings income is less than $5,000, then less than 5,000 pounds, then again, you get a 0% tax rate for the first 5,000 of your savings income. Again, if your non-savings income is less than 5,000 pounds, Ash, then your savings income on the first 5,000 pounds, there will be a 0% tax charged. Right? However, if your non-savings income is more than 5,000, the 0% starting rate is not applicable to you. And in this example, your non-savings income was more than 5,000. So technically speaking, this 0% start rate does not apply to you, but go down. Because this 800 pounds is your savings income, in this question at least, what happens, Ash, is this. This is your savings income. And here what happens is if you are a basic rate taxpayer, that is your taxable income is below 37,700, then for the first 1,000 of your savings income, you will be taxed at 0%. If you are a higher rate taxpayer, that is you pay 37,700 plus up to 125,140, then the first 500 pounds will be taxed at 0%. The remaining anything in addition of that will be taxed at the higher rate band. For example, let's look at illustration 6 for you to understand this, Ash. Okay. Jane received bank interest of 3,000 during the tax year 2024-2025. Okay. Calculate Jane's income tax liability, assuming she also had non-savings income of 11,000. Okay, Jane also has non-savings income of how much? 11,000. So first of all, you need to calculate how much is Jane's taxable income. Right? So how do we do this? It's very simple. Again, you know what the personal allowance is. This question itself is very simple, Ash. 11,000 is the income. 11,000. But you know, as a matter of fact, that there is something known as personal allowance. In this case, because Jane has an income of only 11,000, personal allowance is 11,000. Therefore, in this case, Jane has a taxable income of 0. Therefore, the non-savings taxable income for Jane is how much? 0. Now, in this case, Ash, because non-savings taxable income is 0, the savings income of 3,000 pounds, what happens to the savings income? First of all, personal allowance, a little bit is still pending. How much is the total personal allowance, Ash? 12,570. Out of that, 11,000 has been deducted. So another 1,570 personal allowance is still remaining. Therefore, the taxable savings income is how much? 1,000, I think 430, if I'm not wrong. 1,430. Right? So the total taxable income in this case is 1,430. Now, what happens, Ash? See, again, go back to the note. Here, a rate of 0% applies to all taxpayers where savings incomes falls into the first 5,000 of taxable income. Here in my example, Ash, my savings income is literally my only taxable income. Therefore, it falls in the category of the first 5,000 taxable income. Therefore, I will tax this savings income at 0%. So the tax liability becomes $0. Ash, is this clear? Just say yes or no. Quickly. Moving ahead, let's look at what happens if the savings income is 15,200. Right, Ash, clear, right? Yes. So if the savings income is 15,200, in that case, what happens? In that case, again, think about it. Let's just do it. Sorry, this is not savings income. Non-savings income is 15,200. Remember, Ash, by now you should know there are two types of income, savings and non-savings. Okay. The non-savings income is 15,200. And you know, as a matter of fact, that there is personal allowance. We deduct the personal allowance of 12,570. Therefore, the taxable non-savings income is how much? 15,000 minus 12,570. Should be 2,000. 15,200 minus 12,570 is how much? 2,630. This is the taxable income. Okay. Now, what about the savings income, Ash? Savings income, we have a savings income of 3,000. Savings income is 3,000. This was the non-savings. This was my personal allowance. And remember, see, personal allowance is fully consumed in this question. So my savings income is 3,000. And because personal allowance is fully consumed, for savings income, there is no personal allowance. It is zero. So the taxable income, Ash, will be how much? 3,000 minus 0 is 3,000 itself. So the total taxable income in this case is 2,630 plus 3,000, which is 5,630. Total taxable income is 5,630. Now, what happens? Remember this, okay? As I said, of the total taxable income, again, I'm going back to my first line. What happens here in this case? For the first 5,000, we need to know a few things, right? What are the few things that we should be aware of? This question is, this 5,630, we have to break this down. What do I mean by break this down? See, 5,630 is our income, but in that, our non-savings income is 2,630. So let that 2,630, because it's non-savings income, be taxed at the usual 20%. This 2,630, the way you treat it is usual. As usual, 2,630 into 20% is how much? 526. Why? Because the total income is below 37,700. Now, the first 5,000, the question says that, go back here, is it? A starting rate of 0% applies to all taxpayers where savings incomes falls within the first 5,000 of taxable income. That is, how much is the savings income, Ash? 3,000. Total income is 5,630. Out of this 5,630, 2,630 is non-savings income. Right? So the total taxable income is 5,630. But in that, the first 5,000 income, in the first 5,000 taxable income, 2,630 is non-savings income. If 2,630 is non-savings income, the balance is savings income. So how much is savings income? The balance is 2,370. So Ash, 2,370 dollars of savings income falls in the first 5,000 of total income, because 2,370 falls in the first 5,000. That 2,370 will not be taxed, or rather will be taxed at 0%. Right? So Ash, is that clear? Savings income that falls in the first 5,000. How much savings income falls in the first 5,000? 2,370. So the savings income that falls in that category is 2,370. And because of what I've underlined here, that will be taxed at 0%. Therefore, the tax paid,
it's 6 o'clock,
liability, which is a better word, is $0. In that, the first 5,000 is done. Is 5,000 our total taxable income, Ash? No, it's not. We still have another $630. Right? Now, again, Ash, remember, out of this 5,630, 2,630 was non-savings income. We've taxed it as usual. The remaining 2,370 was savings income that is part of the first 5,000. The excess 630, see this, the excess 630 needs to be taxed. So the extra 630, the remaining savings income, how much? 630, that will be taxed at 0% as well. Put the remaining savings income will also be taxed at 0%. Why will it be taxed at 0%? The reason is simple. Go down over here, Ash. If you are a basic rate taxpayer, then $1,000 of the saving income, that is the second category. This is the first category of savings income that fell in the first 5,000 of the total income. This 2,370 was part of the first 5,000 taxable income. Because this 2,370 falls in the first 5,000 of taxable income, this 2,370 was taxed at 0% as per the rule. The next part of the income, whatever it is, it depends on what kind of taxpayer you are. If you are a basic rate taxpayer, then for the next set of savings taxable income, you will pay 0% tax. In this question, because your taxable income is below 37,700, Ash, you are a basic rate taxpayer. Your income is below 37,700. So you are a basic rate taxpayer. Therefore, the remaining 630 is also taxed at 0%. Therefore, the tax you will pay is 0 plus 0, 0. That plus 526, 526. Therefore, the tax liability will only be 526. Ash, is this clear? Is this helpful, Ash? Can we look at the last one? Going back to that same question. What if your non-savings income is 29,000? Okay, let me complete that. What if your non-savings income is 29,000? In the same question, I will change the numbers. Non-savings income is 29,000. Personal allowance, as usual, is 12,570. So taxable income is 29 minus 12,570 will be 16,430. What about savings income? Savings income is the same, $3,000. Because personal allowance is fully utilized, there is no personal allowance to deduct from savings income. So the taxable savings income is 3,000. So the total taxable income is 16,430 plus 3,000. It's 19,430. Now, 19,430 is your taxable income, right? Now, in this 19,430, 16,430 is non-savings income. You understand? So, what happens? I'm going to remove this part. Non-savings income is 16,430. That 16,430, because you are a basic rate taxpayer, will be taxed at only 20%. So 16,430 into 20% is how much? 3,286. What about your savings income? Remember it this way. First of all, the savings income does not fall in the first $5,000 of total income. What do I mean by this, Ash? Listen very carefully. Total income is how much? Total taxable income is 19,430. Out of that, 16,430 is non-savings income. So there is no part of savings income that falls in the first 5,000. Therefore, Ash, this 0% tax rate will not apply. Which 0% tax rate will not apply? Where is it? For me, the biggest struggle is to find where are things. This 0% tax rate will not apply because the savings income in this question is not falling in the first $5,000 of taxable income. So this will not apply. So what will happen? Go down here. If you are a basic rate taxpayer, which in this case you are, in this question you are a basic rate taxpayer, given that you are a basic rate taxpayer, again, think about it this way. The first $1,000 is taxed at 0%. The first $1,000 is taxed at 0%. So how much is the savings income? 3,000. In that, the first 1,000 is taxed at 0%. Therefore, it will be 1,000 into 0 is 0. The remaining, how much is the remaining? $2,000 or 2,000 pounds of savings income will be taxed as usual. As usual, as in, given that you are a basic rate taxpayer, it will be taxed at 20%. So 20 into 2,000 is 400. Therefore, the income tax liability 3,286 plus 400 is 3,686. Ash, is this crystal clear? Going down to my example, I think I was in which chapter? Chapter 4. Which question was I doing? This part. Ash, now what happens is your total taxable income is 41,430. Correct? So, what is it? First of all, look at the note. Okay, there is no note. No problem. 41,430, out of which only 800 is what? Savings income. First of all, that original, there is no amount of savings income that falls in the first 5,000. However, as per the question, what happens is this: up to $1,000, you are taxing at 0%. How do I know? As per the rule, the second category of savings income. See, first category of savings income is that savings income which falls in the first $5,000. The second category I'm talking about, up to $1,000, it's taxed at 0%. Right? Therefore, what is happening is the first $500 is taxed at 0%. The remaining $300 is taxed at the remaining 40%. Why 40%? Because we are a higher rate taxpayer. Ash, clear now? 200%. Everybody clear with this? What were we doing? Sorry, we were looking at residential rental income. Everybody clear with rental income? Guys, yes, perfect. Now, guys, any part of this chapter, specifically, if anybody has any worry, if specifically anybody has any concern, let me know and I will do that. Because again, I've been getting messages from students saying, sir, we're okay with the textbook. We just want the kit to be done. Kit is tomorrow. In fact, what I am thinking is to benefit all of you. We can share specifically to those who want kit questions to be solved, etc. We can share access to our LMS where you can watch the kit questions. Exclusively, we have videos where we have uploaded. Expert faculty has uploaded them solving exam kit questions. You can watch that. So please don't worry. Today, all we're doing is what? We're only looking at the topics from the textbook which you are unclear with. That's all. How many of you are having issues with cars? Cars, let's look at. For cars, we have certain allowances. Okay, we have allowances of up to the first 10,000 miles per annum. There is an allowance of 45 pence. Pence. Pence is the plural of penny, right? And the over 10,000, you have 25 pence. Okay, so let's look at cars. So again, we still have property income. Anybody wants me to look at illustration 3? Or is it clear? Is it fine? Just have a look. Again, guys, you can specifically ask me to do certain parts of the textbook. I'll do that. Otherwise, I'll just go in order, usual order. Okay, because I've done an example of property income and nobody is saying anything. I think cars, we're looking at cars and I think more detail in chapter 5. Let's look at premiums received on the grant of a short lease. When you lease out your property, you will get a certain amount, like a lump sum amount. And we're talking about taxes related to that. Right? Now, for this, we have a simple formula which you just need to apply. Again, I'm not somebody who would normally prefer making you mug up formulas. So I'll do the illustration. Wakana granted a 21 lease, one lease to Charles, right? The premium is 10,500 pounds. So calculate the amount assessable on Wakana as property income in the tax year 2024 2025. So again, the premium is how much? There is a premium of 10,500 which you have got today in your hands. So you need to know the assessable amount which we will need to pay in taxes. So it's like you've collected a big lump sum amount and you've given out your property for 21 years. So what do you do? In this case, what is it that we need to look at? Again, it's very simple. Very, very simple. What do we do? Premium is 10,500. Then what you do is from that 10,500, again, we need to take 2%. We will deduct 2%. 2% of the premium amount. So we need to deduct 2% of the premium amount. Premium amount is 10,500 into N. N is the number of years. According to this question, the lease is 21-year lease. It's a 21-year lease. So N minus 1, 21 minus 1. So 2% of 10,500 into 21 minus 1 is how much? 20. So 2% of 20 is 0.4. 0.4 into 10,500 is 4,200. So the premium is 10,500. From that, 4,200 is to be deducted. So you will obtain the assessable income at 6,300. As simple as this. There are some people who use the second calculation, which you can also do, but I just normally prefer this calculation. I don't know why, it's just a personal preference. So you can also use the second formula in order to get the answer. Furnished holiday letting, we will come to that. Okay. Just seeing if there's a question. Anyway, we'll come to that question. First of all, when will you treat a property as a furnished accommodation? When, first of all, it is furnished. Second, it is given out for commercial benefit. You get rent from that. And you will say it is a holiday accommodation only when it is available to let for not less than 210 days a year. It should be available. And actual out letting out should be for at least 105 days a year. This is some criteria, some conditions. Right? Now, in this case, what do you do? What is the tax treatment? Now, again, Shelly, I'm doing this for you. In a furnished holiday accommodation, interest, you can deduct it as a business expense. So instead of giving you a relief of 20%, remember I told you there's a relief on interest. You cannot just, you remember earlier when we looked at property, I said interest you cannot deduct as an expense. You remember, Shelly? I said that 7,500 cannot be deducted as an expense. We'll just give you a relief of 20%. But in a furnished holiday accommodation, the interest can be fully deductible as a business expense. So that itself is good news for you. So your tax liability will go down this way. Okay. Then cash basis, a deduction is available on a paid basis for plan. Okay, the cash basis, you know what it is, right? Sorry, I had a little bit of somebody to speak to. Anyway, we're looking at what? Yes, cash basis and accruals basis. Okay, cash basis, accruals basis. By now, Shelly, I'm assuming that you are comfortable with the two. Okay, cash basis, accruals basis, you learn everywhere. Okay, capital gains tax rollover relief, gift holdover relief, and business asset disposal relief are available. Now, this we will look at later. But any losses made in a qualifying furnished holiday accommodation business may only be set against assessable income of a later tax year from the same furnished holiday accommodation. That is, if there is a loss, then you get to kind of make up for that loss. You can deduct against that loss only within the same business. And let's look at test your understanding 5. That will kind of give you a sense of furnished holiday accommodation. Percy rents out a home fully furnished. The house does not qualify. Oh, wait. Sorry. The house does not qualify as a furnished holiday letting. For the tax year, okay, so this is a normal house. Anyway, let's do it. For the tax year 24-25, his rental expenses are 460, 600. Remember 460. It's finance cost. Insurance is 600. New conservatory, well, that is something you have added. It's a new, it's not an expense of running or maintaining the property. This 5,100 is an expense of enhancing the property. It's a capital expenditure. And this is not to be deducted. And obviously, as I said, interest cost also not deducted. So, how much can Percy claim as allowable expense? Only the insurance of $600 and the replacement of $200. So, the total amount which Percy can claim as an allowable expense is 600 plus 200, 800 pounds. Shelly, is this clear? Perfect. Now we're moving to what? We're moving to employment income, right? Again, there is criteria for you to assess whether you are an employee or not. Employment income is where you are having a job, you have a fixed salary, you have to, you have a contract with the boss controls you, you get certain benefits, okay? You use the equipment which is provided by the boss. In this case, in these conditions, you are an employee, and any money that you earn from this is employment income. You understand? So, again, let's get started. Let's look at this question. Ada is a marketing manager. Finished holiday accommodation, chapter 5, illustration 1. Ada is a marketing manager, blah, blah, blah. During the tax year 24-25, she incurred the following expenses in connection with her employment, all of which were reimbursed by Dale. Dale is her boss. 1 second. Yes. So what is happening is during the tax year, she incurred the following expenses in connection with her employment with Dale. Okay. So in this case, what do we do? How do we deal with this? See, her home phone is 100. Line rental is 100. Business calls 85. Subscription to local gym. Subscription to Chartered Institute of Marketing. And train fares to attend meeting. Now, all this is actually covered in this writing bits, theory bits, which I don't want to spend too much time on, but I will explain this through this question. Okay. So what is happening here is this. The $85 was for business calls. State the tax position of the reimbursed expense and explain how they should be treated. Oh, and the answer is here itself. Yes. This $85 was only exclusively and necessarily incurred in performance of the duties. And if you go back, we say that, where is it? Expenditure is only deductible if it is wholly, exclusively, and necessary for the performance of the duties. And obviously, you need a line, connection line, business line to speak to people. So this 85 falls in that category of wholly exclusively and necessary for the performance of the business activities. What about the line rental of $100, 100 pounds? This $100 is for personal use and therefore is not an allowable expense. Okay, let me move ahead. Subscription to the local gym also will not be an allowable expense because it is not wholly exclusively. Go back to the top. Expenditure is only deductible if it is wholly, exclusively, and necessarily needed for the performance of the duties. Can you ask them to initiate again? They went, they left. Got a message. Okay, anyway, coming back. Now again, business calls we've done. Subscription to local gym will not be an allowed expenditure which you can deduct. What about subscription to Chartered Institute of Marketing? This is an allowed expense. Why? Again, according to the question itself, certain expenditure made by the employee is allowed by statute. One of them is fees and subscriptions to professional bodies like ACCA. When you pay that, that can be, it is an allowed expenditure. It can be deducted. Because she is in a member of the Chartered Institute of Marketing, because she is a marketing manager, that 600 is an allowable professional subscription relevant to ADA's employment. Okay, train fares to attend meetings, yes, it is allowable because she's doing this for the sake of the company. Okay, so I hope this is clear so far. Okay, guys, I hope this is clear. I hope it is easy. Again, if there is any specific area which you want me to solve in this question, I will do that. Right? So we will have a look at this. Just give me one. Please give me a second. Okay. Any specific thing you want me to do from this chapter, guys? Again, whoever wants to reach out to me, wants specific help, etc., can message me on this number. Just take a note of this number and don't worry. Tomorrow we will do. In fact, forget we will do. What I can do is today itself, whoever messages me, I can give you access to the LMS you can start watching the exam kit content where we have solved, our expert faculty has solved exam kit questions. So you can message me on this number right away, and I will ensure that you are given access to it so you can watch the recordings. Exam kit. Okay, because anyway, the attendance is very poor. So whoever wants, take access and you can watch it. How many of you are okay? Let me just pause this. Yes. So as I was saying, guys, I've done today whatever max that I could in the time that we had. Given that your exam is in a week, what I can do for you in order to help you further is, again, instead of keeping you busy tomorrow for 3 hours, 4 to 7, we had initially planned the marathon 4 to 7. But I feel that at this stage, what I will do is whoever is interested, reach out to me on this number. I will share with you the access of our LMS where we have this resource. We have 1 minute to pass videos, we have videos on technical articles, and we have videos on exam kit solving. So you reach out to us and we will share the access of this with you. Okay, again, and that's it. I will see you soon, guys. All the best. Reach out to me, message me. I will definitely try to help you as much as possible. All right. Thank you so much, guys. You can leave. Bye.